Welcome back, everyone, to the next part of applying the basics. In today's lesson, we're going to look at how we can actually go about trading support and resistance after we've identified consolidation zones. As a refresher, here we have an example of a DBS zone defined by a single candlestick. Once we have identified a DBS or SSR zone, how can we utilize consolidation to execute trades? I want you to start thinking about that as we move on through this lesson. So let's talk about trading strategies we could implement with our new and improved understanding of SR. As we talked about in previous courses, we want to be buyers at support and sellers at resistance. Well, now we have a pretty clear visualization for how we can identify support and resistance during periods of consolidation. Utilizing DBS and SSR zones, let's talk about an aggressive trading strategy for long positions. This could revolve around setting bids along the upper limit of a DBS zone, with a stop loss below the zone. On the other hand, an aggressive trading strategy for shorts could revolve around setting asks along the lower limit of an SSR zone, with a stop loss above the zone. Now, a more conservative strategy might involve layering bids or asks within a zone, while placing a stop loss above or below another level where our trade thesis gets invalidated. Remember, these zones can work very well as levels in our LTE framework. However, they do not necessarily give us complete setups with exit targets. These strategies are to be considered as loose frameworks when approaching a potential trading opportunity. They will not work every time, and therefore it's essential that you always journal your setups. This allows you to reflect on your trades at a later date and begin crafting a profitable trading system. Now let's break down the fundamentals on a real market scenario. Here we see an SSR zone. We notice that this consolidation zone formed before a bearish reversal to the downside. The strength of this zone was confirmed when price broke bullish market structure and made a lower low here. Now, let's look at the time spent forming this zone. This zone formed over a few sessions, which means that it's not as strong as a single candlestick, but still valid nonetheless. Now, how could we potentially execute a trade using this information? Well, maybe we decided to be aggressive and short the lower limit of the zone, with stops just above the upper limit. Or maybe we decided to be conservative and spread our asks throughout the zone and set our stop just above the last swing high right here. Regardless of which approach we chose, we'd have been pleased to get filled on this wick here for a nice trade entry. Now this point ties in nicely to the last fundamental. Let's look at the depletion factor. Since we may have entered a trade right here, we know that this zone has already been tested once. Now moving forward, do we think it would be wise to short this zone on the next retest? Maybe, but we can all agree the reaction won't nearly be as strong as that first test. I want you to hold that thought as I reintroduce a pivotal concept and deepen your understanding of trading. Let's talk about SR flips for a second. We briefly learned about them in the first course, but I really want to emphasize them here. Remember, SR flips are essentially levels that flip from support to resistance or resistance to support. One of the most fundamental aspects in trading revolves around identifying SR flips in real time. These SR flips tend to occur around consolidation zones, like the DBS and SSR zones we just learned about. Now let's talk about the general strategy for trading SR flips. For long positions, we'll want to buy a broken resistance when price trades above it. For short positions, we'll want to sell a broken support when price trades below it. Now let's pivot back to our previous example. Remember our SSR zone we just talked about? Well, look what happened on the next test. Price actually broke and traded above the level. Now this is where traders can look for opportunities in the market. Here we see a potential SR flip we could have traded in real time. Our SSR zone may have just turned into a DBS zone. Remember, for long positions, we'll want to buy the last resistance when the price is trading above. Well, here we could place bids in our previous SSR zone, set a stop loss below the last higher low, and expect uptrend continuation. This is the essence of successful trading. Now let's do a quick recap of the key takeaways before we move on to some more real market scenarios. As traders, we want to be buyers at support and sellers at resistance. Now that goes for both established SR levels as well as the new ones that are created via SR flips that we may witness in real time. Now DBS and SSR zones are significant representations of support and resistance. They are consolidation zones. And it's key to remember that consolidation zones provide us access points for trading the market. We can now utilize our understanding of SR to start looking for actual trade setups. In the next video, Trip's going to take a deeper dive into trading execution and look at some real market scenarios similar to the ones we talked about today. Thanks for watching, and I'll see you soon.